All right, good morning, everyone. Start it up. Okay, Friday's session in the States was, a real change in the way we closed the week to the way that we started the week. I mean, markets were looking very shaky, I think, at the beginning half. Then on Thursday, Friday, we managed to pretty much gain it all back once again within kind of 4 or 5 points of all-time highs on the S&P. It's quite incredible, that we're able to look so bad only 2 days before and then look so good only 2 days later. And I think that's just starting to become the area that we are, the type of market that we're in at the moment. I was speaking to some of the other guys earlier. To an extent, it feels like we are making some sort of topping formation, but it's a major consolidation. There's going to be a real move that comes out of this. I'm convinced. And the way that we kind of keep going back and forth, the market kind of keeps killing guys for trying to buy it for a breakout, and it keeps killing guys for trying to sell it for a breakdown. And neither one's been working. So I think you just got to be really patient for a breakout, and in the meantime, just kind of play the opportunities. We had the non-farm payrolls obviously on Friday, the biggest data point we've waited for in quite a long time. And I was disappointed in it. The biggest thing I was disappointed in was the prior month's number actually got revised lower. And not only did it get revised lower, but it was relatively significantly lower. And the number was already bad to start with. We came out more or less in line, and we missed by 5,000 in this past month's number. So, I think you look at that as in line, but as the prior month's revision, that was, I think, soft. The average hourly earnings also, weren't as big of a rise as what we'd seen out of some of the ECI statistics recently. So, I think the market is definitely and quite clearly after Friday in the space of good news is bad for the market, and bad news is good for the market. And we had the bad news in terms of all of those data sets that came out, and the market loved it because it, if anything, pushed the Fed's chances of a rate hike back. We were trading around 2.2% on the 10-year yield. We dropped all the way down to 2.10. So, like we said, the market's been perfectly following around the bond market of late, or as in an inverse relationship to yields. And that's probably what we're going to see in the near term. All right, moving on into Asia. All the markets were up outside of Australia. It was a little bit down. And a lot of people thinking that the Reserve Bank may be ending its monetary easing cycle. That hasn't stopped China, which obviously cut rates over the weekend by 25 basis points. One thing that I'll make note of here on the Chinese story is it's really starting to feel like the Chinese rate cut cycle is starting to feel a little bit more like when you started cutting rates in 2008 in the States, like it's too little too late, and that it, or maybe call it 2007, and that it's actually just showing everybody how broken the system is. So yeah, other than that, not a whole lot that happened in Asia. Here we got a chart. The chart's of interest on the day. It's the timing of the first rate hike, and we just mentioned now the ECI numbers and the average hourly earnings, which came on Friday. Average hourly earnings were a bit of a disappointment, especially relative to ECI. So we've turned the ECI as the employment cost index is what that stands for. That started to really turn up hard over the last 2 or 3 months. And like we mentioned, I think a couple morning calls ago, we are already as high as we were when the Fed started hiking rates back in 2004 in terms of the ECI numbers. So, I think if we could just get average hourly earnings starting to turn up a little bit more, then the Fed will probably be forced to start to hike rates sooner rather than later. All right. A couple earnings out this morning. We had AngloGold and Lonmin. So Lonmin was a little bit too late for us to actually get it on here. You can see there AngloGold is more or less in line. I mean, the revenue number is a shade of a beat. The headline earnings per share, that's a fourth of a cent. That's 0.4 of a cent. So, that's total non-event. So, like we said, I don't think that it's a big surprise. Obviously, either way, it's more or less dead in line. Lonman, to me, also, just throwing you a couple numbers off the Bloomberg terminal here, you can see the Lonman first half loss per share actually came in at 13.6 cents. So pretty much right in line with consensus that I'm looking at on the terminal here. So yeah, revenue expected at 527. I'm not 100% sure what the revenue number was, but the big announcements there are probably going to be around the job cuts that they're going to have and and the actual outlook rather than the earnings. All right, let's get into some of the key factors for today. Very little to look at. We've got the Bank of England bank rate basically at 1 o'clock, expected no change. That's basically the only thing there is to look at today. Otherwise, I think we'll just get into some maps here. Okay, first thing that we're going to look at this morning is Standard Bank. Just going to show this again. I know that we looked at it the other day. 170, obviously a major level. It's 2 days in a row we've been below 170 and convincingly below. When that number from payroll number came out and yields in the States started to drop, that also started to drop our local interest rates. And when local interest rates started to drop, the rand started to strengthen quite a bit. Those two things obviously took our interest rate sensitives, be it the banks, the retailers, insurers, all those kind of guys, started to push them higher. And we got a big reversal out of Standard Bank, traded from 169 to 173 on that reversal, and then we faded a little bit down into the close. But this 170 level kind of started to cement its level, its importance on the way that we've managed to hold it over the last couple sessions. Next one to look at is PPC, which is one we don't look at often, but PPC definitely dropping out of a bit of a descending triangle formation here. If you can see this thing, I mean, for years now, it's just been trending downward, especially over the past year. It's been really getting hammered and dropping to new lows, obviously probably lower target coming. MTN, there's, I think we broke out. I wouldn't say we broke out there, but we broke out down here on this flag and on this little triangle formation as we came out, broke out from 225. We took out the highs at 230, so we managed to hold those highs, from where we broke out to new recent highs above 230. We managed to hold that on a closing basis on Friday. But if 230 drops and holds below that, I think and I would fully expect us to come down and test this 225 level or somewhere over here around the 200-day moving average, which is only a shade above 225. All right, we're looking at Impalas. Impalas, after failing at 70 on Thursday, is really starting to look a little bit ominous here. It was quite a big rejection off of that level. After the earnings, the way that the Gold Fields numbers and Harmony's numbers have come out, I mean, AngloGold maybe give it some reprieve this morning, but the numbers in these sectors just, I can't get off the ground. I can't remember the last time any of these companies were actually making a profit, or at least a reasonable one. And so, I think that it's going to take a lot. I mean, we're still waiting on potential rights issue out of this thing. The platinum and gold price continues to struggle, even when interest rate outlook starts to drop. They just can't get off the ground. So just keep that in mind. The same thing here with Gold Fields. And I think that to an extent, I mean, we showed this a couple sessions ago after, when they had those earnings that day, and when they bombed out here below this pattern. And I think that if we take out the lows here, so if we take out the lows around, call it 43 and change, then I think this thing can come down and test the all-time, not all-time, but multi-year lows down here in the low to mid-30s or mid-30s. And the last one we're going to look at is Bidvest. So I know we showed this pattern a few days ago and talked about this head and shoulder setup here potentially. We've dropped it now. I think that it's still got quite a lower target. So just keep this one on the radar. I think it definitely has to come down to test the 200-day. The target would probably be closer to maybe 290, 295. But we're at least probably going to come down here and test the 200-day moving average before we can start to regain momentum to the upside. And that's it for today, guys. Good luck out there.